To short a stock, a trader has to borrow it first and then sell it on the market, hoping to profit as the stock price goes lower. But sometimes the stock goes up and forces anyone who is short to buy back the stock and return it to the lender. This buying pressure to cover their position is known as a short squeeze. Sunnova is a residential solar and energy storage service provider in the U.S. The company provides operations, maintenance, monitoring, repairs, replacement, equipment upgrades, and power optimization and diagnostic. Sunnova has 30% of its floating shares shorted. Also, when you look at the monthly chart, it is nearing what I call a buy level or accumulation level. And when you look at this video, you would think that that's also going to serve as a catalyst for the price to pump.
Joining us with his outlook today is Sunnova CEO John Berger. John, great to have you back. Thanks for the time. I wonder if you heard Pippa talking about some of the potential policy tailwinds, and I wonder, do you think that's still in the can? We're just getting started. Where are we on that?
Well, thanks, Carl, for having me. We're just in the early innings, but we're seeing a boom in residential energy, and it's really transformed at this point in time. So part of what's happening here is the residential, particularly behind the meter, has shifted. And it's not just about solar panels anymore. It's about batteries. It's about load management. It's about heat pumps. It's about generators and EV chargers all coming together to be operated on a software system and then supported to flow power when storms are outside or when heat is really draining the grid system. And we're really seeing a transformation of an alternative service of power. So essentially a competitive source of power or freedom to have more reliability at a cheaper price for your energy, not just for your home, but for your car as well.
Right. But do you think there'd be fewer concerns about residential demand growth if maybe, I don't know, electricity prices were higher than they are?
Well, they continue to move quite high, and we see actually constructive moves with regards to utility rates. Utilities are a socialistic system and communistic, even with some of the entities out there. So there's no capitalism, very little of it, inside the U.S. power industry. And so what we're seeing outside of the country, for instance, I was recently talking to investors and shareholders in Australia. They're seeing a lot more open market here where you can combine some grid power, some of the power from the solar, the batteries, the EVs, and that comes together in a single competitive source. And that's able to do things like get you free power, believe it or not, and then some payment on top, which is the case in some cases in Australia, because the energy on the wholesale side or the utility side is so expensive. And we're seeing that here in this country. We're behind on the regulatory side. We need to open things up and allow freedom for consumers to choose their power provider, and then power rates will fall. So we actually see the utility rates continuing to climb here for the next several years until regulatory change is implemented.
Interesting. John, you recently reported earnings, largely better than expected, higher than expected growth outlook. However, the stock did decline, and some analysts are attributing that to just the need for potentially $75 million worth of equity. What are your plans on that front to go to the market, potentially raise additional capital, and what exactly is the size that you're looking at right now?
Well, we are very transparent, maybe too much so, as running a public company. It's very difficult to do, but we've tried to be as transparent and open and honest as possible. And when we laid out our capital plan, you can see our growth is not just strong, it's booming. And a lot of investors are looking at that and saying, I think I like this, but, where is the cash flow going to come from? Where's the earnings? And we clearly laid out that in the back half of this year, we're going to see a lot stronger adjusted EBITDA, and then we're going to see a lot more cash flow. And we're seeing a operating leverage, or basically our expenses going down per customer starting next year. So we're seeing very strong financial performance. We talked about that. We laid out very clearly the capital requirements there. We're well on our way to getting that capital and securing it. So this was really just looking at a long-term plan and saying, look, the business is quite strong. And look, we're doing something that's quite different. we're taking a lot of these homes that are our customers and businesses now, and we're connecting them together like the internet. And that is able to get more energy. Like, for instance, in Texas yesterday, where there was really high power prices, we're able to take some of those customers' energy and what they're not using and sell back into the communities. That gets more value. And that's what I was just talking about with Australia. That's the way the Australian market works, the Japanese market, most of the European markets work. So it's really more about how do we facilitate and get more earnings for the company, but also more value for our customers. So it's quite an exciting time. The power business and the energy business globally is changing.
Now, if this is truly setting up for a short squeeze, at what level can we expect the price to start pumping? Let's go down to the smaller time frames. Let's go down to the weekly chart. And although you have price kind of in a range bound price action for the past year and a half, price is going down just kind of based on the moving averages pointing down. I'm just going to mark off $10 as that is a round hole psychological number. Now, when I compare the volume from the IPO days to current price, there's no volume. So we can't really bank on previous levels as an indicator for price to reverse. However, let's go down to the daily chart just to analyze the IPO price action. One thing to note, this, we'll call it drop, and then base and candle, and then a rally in price. This would have been a great level to go long had the rally up taken out the previous highs in the $30 level. But the fact that price couldn't push high enough to even come close to the most recent pivot high tells me that price is going to penetrate this zone more. And that's why I'm looking at the $10 level as a potential area of interest. All right, let's go down to the daily chart. All right, so you have a spike in volume that occurred during the pandemic lows. And I'm going to just mark so you have a drop in price, base and candle, and a rally out. Just going to the weekly chart. That was the origin of the move that essentially sent price all the way up to $55. So this $6 to $10 area would be the level where I would be looking for some type of reversal pattern or an increase in volume if the short squeeze is going to take place. Now, right now, you have some some basing taking place over the last week or so. So volatility is going down. And typically what happens is you have volatility to follow. In what direction the price is going to go next, don't really know. However, based on price respecting this 13-day simple moving average, if I was a betting man, I would think that there is more downside risk. So here's the potential setup. Get that double bottom. You take out the apex, return, and then you move higher. This all has to happen and be validated with an increase in volume. But look for that $6 to $10 level to hold. Look for buyers to come in. This is the pattern that I'm expecting. And potentially this is the projection. This pattern can take place over the next, pan out over the next, say, 5 to 6 months. Thanks for watching. Subscribe. Please like the video.